now on a record mode. Okay, let me share the screen and then we will have a very quick recap. By the way, I should really thank you for sending an email to me on your learning and the challenges. Well, I did not see the challenges at all, but the only thing what I have felt is that we should have been in a good numbers so that we would have seriously enjoyed the interaction. However, we are a small group, like a small family. I'm sure we all will be getting the equal opportunity to share the knowledge, to share the inputs, and yeah, through the interaction, it is possible to make sure that we are learning what we are supposed to. Well, it's just a quick recap now in the first few minutes, and then I'll take you to for the today's discussion. Well, we have seen something called as the derivatives, basic understanding on that. I got the responses from people, from you guys, that derivatives is nothing but a financial instruments. Yeah, I was so happy when you said financial instruments. Yes, they are called as the financial instruments, the financial securities, in other words. And also, we got to know that the derivatives prices are always depending on the underlying asset or the underlying price. Right. We also spoke why we require derivatives, and I could see that people responded saying derivatives is basically to manage the risk. Yeah, I was very happy when you said that, the word risk. And the moment when you coined the term called as risk, I said there are two types of risk. It could be something called as the quantitative, which can be measured using some statistical tools and techniques. And at the same time, we have a qualitative risk. That also we just spoke about. Maybe you can say a qualitative risk could be the political condition. If a government is not a stable government, then definitely it is one of the problem. It is one of the risk for a nation, right? You may call that kind of risk as a qualitative risk, maybe not as a quantitative risk. Yeah, legal risk can also be called as the qualitative risk. And we also looked into something called as the definition of a risk. We simply call it as the chance of occurrence of loss. Risk never mean that an absolute loss, but it is a probable loss, chance of occurrence of loss. And then one of our batchmate also said derivatives includes futures and options. Well, today we will be seeing the world of the options, like how it looks like and what is the application of that, right? And then I took you to the basics of understanding the listing of the securities, and I was so thrilled when I was discussing this with you. Let me take the first few minutes to make sure that we all are on the same page, and then you have understood the discussion, whatever we did in the first session, right? I just took an example of a company which is Walmart, listed in even in the Mexican stock exchange, Borso, right? Borso Mexican de Valores. It's a stock exchange for the Mexico, and we could see that yes, Walmart is listed over there. The only question which I came up with was to make an assumption. How is that the company fulfilled the requirements of all the listing formalities, and then it is present in the stock exchange, that is PMV. And then we talked about something called as a company has to undergo the process, right? It's a standard process across the globe. You can be in any part of the world, and then definitely when you talk about listing a company or listing the securities or listing the shares of a company, this is the common understanding or the process. And then we also looked into something called as markets which are involved with respect to the formalities as a process. And then we got to know that first of all, company Walmart as a company should get in touch with the investment bank to seek the help of raising the finance. I was extremely happy when you said, why do we require a listing? Why do we require presence in the stock market? When I asked this question, You gave a wonderful response saying that it should be, it should be because that is the means to raise the capital, right? Any company for the matter, if they really want to raise the capital, then definitely they have to undergo the process. And that is what we have seen in the last session. And I was really happy the moment when you started talking about the language of the listing. Yes, Walmart went to the investment bank. We took an example as a JP Morgan Chase. JP Morgan happens to be the IB investment bank. And when company Walmart approached JP Morgan, they said, okay, we will be supporting you, we will be helping you, assisting you to raise the finance. Then we took a very simple example, that is 100 million US dollars is the total money which the Walmart wanted to raise. And investment bank, with the help of their a specific department, which is called as the underwriter, assisted or helped the company Walmart to issue the shares or the securities to the public, people like you and me, and then derive the final price with the process called as book building process. And I give some hypothetical numbers to identify like how the final price is arrived at. We got to know that in the primary market, the company should release one document which could be called as, say, the prospectus. Maybe a prospectus, something like, say, a document which will be having a lot of information, the complete details about the company. And let's say I have the prospectus of a company in my hand, right? I'll be looking into the company name, I'll be looking into the company details like board of directors, the company existence, the incorporation here, the profits, the financial statements for the last few years, everything I'll be having in that one document. And also it will be talking about the price range, the price range. Now, when I say the price range, ideally it should have the range, that is the floor price and the cap price. So within that range, the public, nothing but the investors, can apply, can subscribe for the shares. We took an example of $10 to $12, and then we made a kind of an assumption saying that, okay, if the final price happens to be $10, what's next? Let's say if you and me apply in the IPO process for the company shares, let us assume that we got the shares. And now what is that we will be doing? We will be eagerly waiting to see the first day listing in the stock exchange, because we know that, we really know that listing day returns are always attractive, right? I have seen huge returns in terms of the listing day. Well, I just quoted an example. When I was doing my undergraduation, I did apply for an IPO, and the company was called as Suzlon. I got the shares from the company in the primary market at the rate of 510. And what I did, I was eagerly waiting for that day one because I just wanted to see 510 happens to be the final price. And on the day of listing, definitely it will be going up, because we know that if the company is in demand, if the company is having that credit worthiness, if they're doing a good job, then definitely their shares are in demand. When there is a demand, you can expect an increase in the price. So I was waiting. I still remember we had a financial management class that day, yeah, on a listing day of Suzlon. I took a permission from my professor saying that I got the shares from Suzlon in the IPO. And then I told him that during those days, we didn't had sophisticated technology to use our mobile phone and then make a selling transactions. So what I said, I'll have to go for the broking house. Then he permitted, he was so happy because I started talking about the finance practically rather than what is there in the maybe famous book, VK Balla. On a lighter note, I am Pandey. On a lighter note, I respect them, but still, my professor was so happy. You won't believe, right at sharp 10 a.m., the shares got listed in the secondary exchange, secondary market, and I could see the share prices somewhere around above 700 rupees. I was so happy because 510 510 happens to be my price, and it's already trading at the rate of above 700. I was so happy because I was getting 200 rupees as a profit per share. I was just waiting till 11:30. Already two classes were bunked. I bunked two classes and I was literally worried about my attendance. And I was looking at when do I go back to the college, to the school. And you won't believe I was just rushing. So I decided, let me not take any risk. I sold at somewhere around before 12 p.m. And then I made decent profits. I just went back to the campus and then I spoke to my professor saying that I sold and then I got the profits. He was extremely happy because he is the one who was helping us to understand the finance and the financial markets. And then he took that as an example for the next session. And then he explained us about the IPO mechanism. And by that, I was really happy in terms of knowing the things practically. So I just thought of sharing that as an example. We know that we are working on making money on money, right? Yeah, the finance guys always think it that way. When we have some money, we would like to make money on money, and that's our mind is. And after that, we have seen something called as you as an investor, trader, or a speculator. An individual can be seen with all these three avatars. Yeah, all these three avatars. If I happen to be conservative in nature, then what do? I may not take too much risk. If I'm of the aggressive nature, then definitely I'll be looking at taking the risk. Because we know that in finance, higher the risk, higher the return, right? So we spoke about the analysis which is available for the investors or the traders, right? We spoke about the technical analysis, we spoke about the fundamental analysis, and you also confirmed me that you did study during one of the semester, right? But yeah, why is it we are speaking about these things? We are speaking about these things because our area is risk management. How do we manage the risk, right? That is the reason we started talking about these basics. Well, for now, let me take you. By now, I can see good number of people have pushed in. Yeah, I could just make sure that we have Aldo, Andres, Brian, Carlos, Daniel, Danila, Eduardo, Castro, Janet, Marine, and Marlon, Paulette, Sarah. Yeah. Good morning once again to you all. Great. I was just sharing a very quick recap on what we did in the session one. And I have something which is very interesting today. I'm sure you would love about it because it's practical. Yes, it's practical. And I'm sure I'll be definitely asking you to come up with the projects or a kind of quick cases in the coming days. It's a very long journey we have, nothing urgent, right? And nothing need to speed up. I have already read all the emails sent by you. I've replied to. I could see that no individual is same. Yes, across the globe, wherever we go, no individual is same. And thanks for giving me the opportunity, and thanks for having the start of interaction by writing an email. Great. It was really a great thing to read. For now, as I said, we have something which is very interesting. That is, we will be looking something which is the crucial part of the derivatives. I would like to buy the statement made by one of our fellow mates that the derivatives talks about the futures and the options. And now when you say derivatives market, yeah, let us understand in a very simple sense, derivatives market, and we have on other hand futures market, and we have options market. There is a very simple relationship which we need to establish first, and then we will go to some of the live quotes. Yeah, I would like to do the analysis with you guys, a real time case That is how the finance is, and I'm sure you will be loving that. Today, let me change the color of my marker on this board. Now, I'll be writing here equity market. We know that in the equity market, we could see the equity shares, which are traded equity shares, right? I would like to call this equity market as milk. Yes, I would like to call this equity market as a milk and derivatives market as curd. Do you understand what is curd? Yogurt. Yes, right? Curd. Is there anyone who loves the curd here in the class? You can just raise your hand if you love curd. Come on, guys. Good morning.
I don't know what curd is.
You really don't know what the curd is? Sarah, do you know what is curd?
Is something from the milk, right?
Yes, you're right. Yeah, Aldo?
Is it something like a dessert?
Yeah, kind of like a dessert. Do you understand the word yogurt?
Yeah.
Yes. So curd is nothing but a yogurt here. Got it, Andres?
Yeah, because I searched it in Google and
Ah,
I saw
ah.
it is like yogurt.
Yes, it is like yogurt. And do you like that?
Yes.
Okay, let me allow. Yes, there are two types of yogurt. Can you name what are those? You don't have to do the Google for. I'll just write here yogurt. Okay, curd is the other term we generally use across here in the Asian region. So I just thought of going with the curd. Then I immediately realized I should be using a word called as yogurt on the basis of the experience which I already have with the other part of the world. Yes, when I say yogurt, probably the two kinds of yogurt which I always say is that one is the sweet yogurt and the another one is not sweet. Then what it can be called as? I'll just mention it as salt yogurt and sweet yogurt. Definitely for a sweet yogurt, you will be applying sugar. Well, I'm just going out of the box. Maybe you might be thinking that, but yes, there is a connection here. Now, if you see the price of milk, now if I take the price of milk as say $1, when I say $1, US $1, okay. Now, the price of yogurt, if I want to just say talk about the price of the yogurt, maybe I would say $0.25 ounce, right? Yeah. Now, can you identify the dependent and the independent product here? We have two products. One is the milk and the another one is yogurt. So which one is the dependent product or which one is the independent product? Maybe in terms of the research, you can just try to establish the relationship.
Yogurt is dependent of milk.
Yes. So here you mean to say milk is independent?
Independent milk and dependent yogurt.
Yes. Thank you, Sarah. I really appreciate that. Now, when you say you have milk on one hand and this milk is independent, yes, it is independent. And you have yogurt price. Here I'll be writing it as dependent. Now, what do I understand from this? There is a very strong relationship between these two things. The price of yogurt is always dependent on the price of milk. If I can see an increase in the price of milk, an increase in the price of milk will have a similar effect on the price of the yogurt. Will have the influence, definitely. I'll write here, will have the influence. Will have the influence on yogurt price. Can you tell me why is that I have written here an increase in the price of milk will have influence on yogurt milk? Now, when I say influence, it is a positive influence, and this influence is in terms of, again, increase in yogurt price. I'll just mention that also here. It is nothing but, again, an increase on yogurt price. Can you tell me why?
Because it is an important ingredient.
Okay. Okay, Andres, I take your point. It is an ingredient component, but still something you can extract from that.
Because the milk is like the primary resource to get yogurt.
Ah, yes, yes. To get the yogurt, you need a milk. Very good. I take this point. Can we, I mean, before I make a statement, let me give the opportunity for others now. What is your view on this now? Why is that I'm making this
Dependent
statement?
and
Yeah.
I don't know if it is independent and dependent variable.
Ah, yeah. You can also speak in the language of dependent and independent variable. But naturally, when you look at the yogurt, see, yogurt cannot be, I mean, today we have this chemical oriented yogurt, but forget about that. Now, when you look at the curd on one hand and on the other hand, yogurt, see, yogurt is derived from the milk. Do you agree?
Yes.
Perfect. Now, that's the common sense and the logic which I would like to keep it here when we talk about the derivatives. It's very simple for now. It is very, very simple for us now that, yes, the price of the yogurt increased, meaning there is an increase in the milk price. If there is a decrease in the yogurt price or a curd price, you can easily analyze that there is a decrease in the milk price. They are directly proportional, right? Increase a milk price increase, yogurt price increase. Milk price decrease, yogurt price decrease. Why? Because yogurt is a derived product of milk. Now I'll just mention that point here. Yogurt is nothing but it is a derived product. It is a derived product of milk. So now, any financial instruments. Now let us come back to the point for the one which you said in the last session that derivatives are nothing but the financial instruments. You said a big statement, in fact. You said financial instruments, right? And the financial instruments are nothing but the yogurt for me, yogurt. I'm breaking it in this language because I have already experienced in the last few years dealing with the young minds to convince about the derivatives market and the equity market relationship. They found it a bit difficult, maybe theoretically or practically. They really feel difficult. And that is the reason over a period of time I realized, and then I came up with this as one of the beautiful, simple concept. Now it looks very simple. The moment when you see from your own eyes, you will start feeling it. For you, you will be calling it as a yogurt, and then you will be calling the shares as the milk, and then you will be enjoying your learning for sure. Hold your breath for now. Yeah, I made a statement that yogurt is a derived product of milk. Therefore, now the derived product, whatever we call it as the derived product in the derivatives market, they are called as the financial instruments. I'll just mention here financial instruments. Okay. Now, for me, yogurt is nothing but the derived products. Derived products. And what is milk is called as? For me now, the milk is nothing but the equity market. Equity market is nothing but, again, I'll write here share market. This is again the terminology which is widely used in the Asian region. Equity market, globally used. And now I'm writing underlying, the word underlying. So for me, underlying is a milk and derived product is the yogurt, right? So this is the relationship now. The financial instruments prices increase whenever there is an increase in the price of underlying asset. So I'll just mention here in the left-hand side, underlying asset price, and I'll write here derived product price. I'm using very simple language here. For me, probably I don't require now the finance guys to understand the relationship between these two markets. However, we have the complete group here who's belonging to the finance, and let us enjoy with our common sense the world of the finance, right? So the derived product price and underlying asset price. We know that from where the underlying asset is coming from. Underlying asset is coming from the equity market, right? Or you can say the shares, equity shares, underlying fundamental. And we know that the derived products are available in the derivative market, and derived products are nothing but they are the financial instruments. And whenever there is an increase in the price of an underlying asset, we see an increase in the price, especially for the derived products. If there is a decrease in the price of an underlying asset, then there will be a decrease in the derived product price. With this basics, let us proceed further and explore the market which is available for us, that is called as the options market. I would like to take you guys practically now to understand the options market. Before I get into the websites, before I get into the live quotes, before I get into the options market, let us see something about the options market. Before I discuss, I would like to know it from someone who can talk about the options market. What is options market? Open for you guys. You can have a discussion. There is nothing called as wrong. There is nothing called as right. We know that we are meeting for almost 2 hours in a day, and like one group of friends, and then we are trying to enjoy the learning by removing the barriers, the boundaries, right? Okay, I seriously look forward now. Let me go and check the people who are in the class. And yes, I want someone who can talk about the options market. What do you understand by this? Andres, thank you very much for having your camera on. I'm just enjoying that, yes, we are in the class. Paulette, haven't heard anything so far from you. Marin, Mariana, yes.
Yes, I'm here.
Ah.
I can explain a little bit. I think the options market is where well, options are trade or different financial instruments, but like mainly derivatives.
Okay. Well, I take your point and then I really appreciate. But now what I'm looking is an example. Let us make it very, very simple and then let us digest that. Well, can you give me some examples for the options market on your understanding? Yeah, this question is open for everyone. Yeah, Paulette, go ahead.
Well, mainly derivatives, is it correct? Like options, futures, and swaps?
Yeah, Now we are in the options market. So in the options market, we need an example. Brian, yes, you can proceed.
Maybe if you buy an action from Facebook or Meta and you think that it is going up, so you buy an option that can, I don't know, if it is now on $20, you buy an option for $25.
Mhm.
So you, if this happens, you can have a better profit.
Yes, yes, you're right. Perfect. And now to make it again simple for others to understand, I'll have to show, because whatever Brian said, that is what I on a daily basis I do using my trading app. Yes, on a daily basis, I do buy and sell the futures and the options, the call option and the put option. Yes, see, I already used the term called as the call option and the put option. Okay, now let us write something about that. By the way, thank you very much, Brian, for the response. I really enjoyed it. Yes. Now let me write. We know that in the options market, we have call and then we have put. This is going to be very interesting for sure. And also at the same time, great challenge for the one to convince these two things. But I'll promise you, I'll make you that you will be able to remember this forever, not just understand. I want someone who can talk about the call option or a put option. If anybody is having an idea, you're most welcome to talk about this call option and the put option.
The put options are used to sell and the call ones are used to buy.
Yes, you're right. Aldo, I appreciate your response. Any other response from anyone? There is a slight thing which need to be corrected in the statement of what Aldo said.
Maybe the fact that it is not an obligation, that you decide whether or not you want to use the option or not.
Yeah, that is the textbook language. I still remember that. Right to buy, right to sell. I remember that. Thank you. Any other person? Let me check with Daniel. What's your view on the call and the put option? Daniel, you there? Daniel and Daniela.
Oh, yeah, that's me. Hi.
Yeah, Daniela. Yeah, come on.
Yes, Professor,
Yes.
I'm here.
Yes, yes, please. I'm looking forward for your thought process on the call option and the put option. By the way, I believe you have studied this, right?
Yes.
Okay, okay, fine then. Yes. Yeah, Daniela, please explain me what is call option or a put option.
Where I believe is that put options give the buyer the right to sell the actions of
Mhm.
certain element to a certain price until a determined date. And in the other hand, the call options gave the buyer the right to buy as well actions
Mhm.
a price, but until a concrete date, I think.
Yes, I take your point because you spoke about the date. Yes, there is something which is called as the specification. I like that point. Thank you. Okay. Now it's time for me. Okay, someone was trying to say something. Yes, please. Okay. Well, I haven't shared with you all the evaluation pattern. Okay. I just thought of let us relax for a few sessions and then I'll be sharing you the key of how is that we are ending this course, right? We will be having quizzes. We will be having some projects. We will be having some assignments. We will be having a kind of group discussions, the presentations, everything. In simple words, I'm just trying to make it very simple, interactive. Yes. Okay. Now it's time for me to make you more educated on the most awaiting concept, which is called as the call option and the put option. See, Put not necessarily meaning sell. That's the myth. Put doesn't mean that sell. Now, I'll talk about something called as bull. We know that what is the definition of a bull market. At the same time, we know what is the bearish market, right? Bull is nothing but being so optimistic. And when you talk about the bears, it's not about the optimistic, it is about the pessimistic, right? Now, the bulls are always expecting an increase in price. They always expect an increase in price. And pessimist, what they do, pessimistic nature, the people, the bear market, the moment when you say the bear market, which means that decrease in price. They are expecting that there will be a decrease in the price. Increase in price and decrease in price. So bull market meaning the upward market. I'll just use the another term here, upward market. It can be simply called as the upward market. And when you talk about the bear, you can say downward market. Maybe if you just go to the Google search engine and then type in the bull and the bear, you'll be seeing the pictures of the bulls and bears in the Wall Street also, right? The bulls and bears fight, right? They fight because of the bulls, because of the bears. There is a volatility in the market that we are aware of. Now, when I say you and me, the investors, we act according to our analysis. And if our analysis says that the markets are expected to likely to go up, then we are bullish in nature. And if our analysis says the markets are likely to go down, the prices are likely to go down, then we are expecting the bearish market. So I'll be writing that word because it differs from region to the region. Maybe you may not be having that word which I'm using, bullish market. Maybe if you read the news, you will be seeing this for sure. It's globally used, bullish market and bearish market. I'll also help you by using two more terminologies, saying that bullish market means the positive and bearish market meaning negative. Right. Now we have on one hand the call, on the other hand put. If our analysis, I repeat again, please try to understand this because I'll be taking you to the real prices like how Brian was talking about, right? In the same way, we will be talking in next few minutes. Assume that we did an analysis, maybe the fundamental analysis or the technical analysis, which we already been trained in one of the semester. And our analysis says that, I'll be writing here case 1. Our analysis says that markets are likely to be positive. Markets are likely to be positive. Meaning that is prices are likely to go up. We know that. And this is purely on the basis of our analysis. At the same time, we have case 2. Okay. Now I'll make a kind of team here. Daniel is leading a team. Okay. I'll just take this as an example. And then I say Daniel has made a team and the team has got 5 members. Okay. And they did an analysis about the market, about the stock market, about the equity market. And they realized that their analysis is saying that markets are likely to go down. So I'll be writing here, markets are likely to go down, That is, prices are likely to go down. In simple, prices are likely to go down. Now, what is that we do in case 1 and what is that we do in the case of case 2? is what we will be looking into. For that, now what I'll do, I'll just make sure that I'll be sharing my entire screen, and then I'll take you to the practical application. Let's see, what is that? Okay. Yes. Okay, what I'll do now, I'll just go for the Yahoo Finance. I'm sure you're able to see my Yahoo page, right?
Yes.
Yeah, thank you. What I'll do from the Yahoo page here, I'll just try to click on, yeah, it's getting loaded. Give me a moment. Finance.yahoo.com. I'm on that website. I don't know why it's taking time. Come on. Let me check the internet connectivity. It says excellent. Oh my goodness. I don't know why. Oh my goodness. Just for the time being, what I'll do, I'll just stay pause on my video. Maybe there might be an issue with the internet. I'm not sure, but I'll just put a pause on my video and then let me check. Yes. Yeah, what I'll do now, I'll just go for the Yahoo Finance and then not the API. Come on. Yeah, I'll just go to this Yahoo Finance. Yes, what I'll do, I'll just click on the markets and then I'll see the most actives. Okay, stocks, most actives. I'll just scroll down here now. I've got some list of companies which are the most active. Okay. By the way, are you able to see the screen, and is my audio okay?
Yeah, teacher.
Yeah,
Yeah.
it's good.
Yeah, I got a doubt because of the internet connectivity. Well, by the way, now we can see here Tesla Incorporation. Now the markets are open, and that's the reason we see the price changes. Okay, now what I'll do, I'll just click on this Tesla, the first one. Let me take that Tesla. Okay. Now you can see Tesla is trading at the rate of 243.33 in US dollars. Okay, Andres, you can. Well, you can come back quickly. Anyway, I'm just on this website. Yeah, there was a message for me from Andres. Okay, now I think I should be okay in terms of my video also. Now you can see the price which is quoted here for Tesla Incorporation, that is 243. What I'll do now, I'll try to capture this price. I'll go to the board and then I'll write here the company name, Tesla Incorporation, right? I'll write Tesla. And if I can see the today's date as the 27th June, so I'll be writing that 27th June 2023. And now for me, it's 2018 time, and for you, the time is 8:48 a.m. Okay. By this time, if I want to capture this price, I'll write here the price 243 point. Maybe we can block it at 85. Yes, it's keep on changing. Yes, I'll just try to lock it here. And the currency in USD, if we know that we are talking about in USD, US dollars. Okay. Now, when I say the price, the current price of Tesla Incorporation equity shares is $243.85. What is this price is called as? Maybe you might be aware of it, but let me help you quickly. This is called as a spot price, the price at which it is available in the market for now, today, right? It is keep on increasing. You can see there. By the way, how is it I read this? Can someone help me? How do I read this? The price plus 2.97 plus 1.2% within the parenthesis. Can someone read this for me? Let me hear the language of you guys in terms of reading the numbers. Maybe Castro can try. Marine? Yeah, go ahead.
I don't remember, Professor.
No, come on. This is the practical application. Nothing to remember. See here, 243.82. What is that?
Yeah, the price of the stock.
Price
But I
of
remember
the.
that plus 2.77.
Okay. Any idea on what is that within the brackets, within the parenthesis, plus 1.15 percentage?
It's the gain of the day, I think.
Yes, you're right, Brian. It's a gain for the day. Now, when you say it's a gain for the day, it is comparing with the yesterday's close. Yes,
Okay.
it is comparing with the yesterday's close. Let me take this now, as I'm really concerned about your understanding. I'll just try to capture this. Give me a sec. I'll just get the quick snap of this. Yeah, I found that this is important now because when you start communicating to me, I realize the importance of that. And that is how probably I think I can help you to learn things. Okay. And not here. My board is something something really different. By now you got to know how is that I use my board. Yes. Okay. Now, just have a look at this and then we can go for the break and then we can come back. Then let us look into more and more about the practical applications. Now, this 244.06 is the current market price. I'll be writing here, current market price. Sometimes we simply call it as a CMP. It is also called as spot price. Spot price. Spot meaning at the moment, right? Immediate. The moment when you see the price, it is called as the spot price, the price at which it is available. Now, plus 3.01. This is price change. This is the price change. And now when you look at this 1.25 percentage, this is percentage change. Percentage change. Now, when I say percentage change and the price change, the very important thing is that we will have to go and look at something called as, let me check whether we have the information here. I'll just scroll down. Okay. Let me click on this chart. Give me a sec. I'm just trying to help you with the information. This we don't require at the moment. Historical price. Okay. And we are on 27. Yeah. And if you see here for 26, you have the prices. You have the prices. Now what I'll do, I'll try to capture this also. And then I'll give it to you a task. Probably you can definitely do it practically and then you can enjoy your learning. I'll have to use the space here. Okay. Yes, we are good to go now. We have so much information on the board. Don't worry. Stay relaxed. We are trying to understand practically. And I'll give some clues. Okay. Here you got a task. All the people, listen carefully. You got a task now. You're going to do the experimentation. Now, when I say plus 3.01 is called as the price change. Price change. Plus 1.25 percentage is nothing but the percentage change, which means that it always compares the yesterday's close. So the key here is yesterday's close. So on the basis of the information, whatever I have on the screen, I want you to take up your calculator and then do some experimentation. You have the information, you have the data over there. Try to check how is that you get 3.01 or 1.25%. Now we need to be aware of this. This is really important and the basics before I talk about the blah, blah, blah about the risk management, right? Anyway, this is a part of the risk management. For this, what I'll do, I'll give you, say, 3 minutes time. You can try, and you can make an experimentation. You can use your calculator and then try to do that. Over to you. And it's 8:56 a.m. Let's say you will be having 3 minutes time. And after 3 minutes, I'll be checking the answers. I'll be checking the inputs with you. And then we'll see what is stored for us. So 3 minutes is pause for you guys. Try to find the answer. How is that we get 3.01? I just repeat it. I have given the information. I have given the data also. You will have to just make sure by the experimentation, how is that we get plus 3.01 and how is that we get plus 1.25%. It's a simple math. As I say always, finance is all about the common sense, right? Do the experiment. Hint number 1 is yesterday's close, which is there already on the board. Hint 1.
Professor, it's just a subtraction, right?
Yes.
Yeah, and 1.25% is just the change. So
Yes.
I think it's just that.
Yeah. How is that you got 1.25%? Can you help us with the calculations?
Yeah, the 244.06, just subtract by 3.01 and it will give you 241.05. And the change between the current price and yesterday close is 1.25. It's just a division.
Yes, simple, perfect. Marin, thank you so much. I really liked it. Great. It is here, as I already said. Yeah, if you see the close, I've already mentioned the close. See, there is a close. And I gave a hint number 1 as yesterday, and yesterday's date happens to be for us 26, June 26. And if you see the close price, it is 241. From 241.05, now it is at 244.06. Now what I'll do to make it more simple again and then help you to understand, I'll just try to get my calculator. Yes. I'll show it everything here so that you will not be forgetting forever. On a presentation mode, yes. And then I need a calculator. The moment when I take the calculator here, and then I know that the current price is 244.05. And if I do minus yesterday's close, the yesterday's close is, you can see 241.05. So what I'll do, 241.05. And if I take the difference, it simply gives as 3 here, right? But it is not 244.05. It is 244.06. Oh, my bad. Yeah, let me do it once again. 244.06. That is the current price, which you're seeing on the screen, minus 241.05. And now if I get this, yes, I got it 3.01. This is the price change. Now, what I can do 3.01, the price change, divided by which price? The base price. And the base price is yesterday's price. And we know that yesterday's close is 241.05. So what I'll do, I'll take 241.05, and then if I do equal to, I get some numbers. To get it in terms of percentages, I can do times 100, and you can see 1.248. Since the third digit is more than 5, it is rounded off to the second digit, that is 1.25%. And we have 1.25%. So I believe by now you have got the calculation aspects. Well, it's been an hour now. It's let me check. It's 9 a.m. for you guys. Let us take a quick 10 minutes break. What I recommend you is that during the break, once you come from the break, try to do this calculation. And I will be definitely asking you to interpret what these numbers are saying. Now, when I say the numbers, that is point number 1, point number 2, and point number 3. You will have to tell me in sentences. Okay, that is the task for you. Can we call for the break now?
Yes.
Okay, perfect. See you after 10 minutes. Thanks, Aldo. You can give a thumbs up if you're done with your break. I can see the responses now, around 4 responses. Yeah, great. 5 responses. Thank you so much for that. 8. Right. Let us get back to the discussion here. In fact, we have looked into the reading of the live quote prices, including the price change and the percentage change. I want one who can read what this is talking about. I'll just take you to the another sheet, and then let me go for the different years. Now, on the screen, you are seeing the live prices of Tesla Incorporation. I want someone who can be volunteer to interpret what is the price, what is the percentage change, what is the price change for now. Who would like to interpret this? Who would like to read these numbers?
So, Professor, the current price is 244.06.
Mm-hmm.
The change between yesterday's close is $3.01,
Mm-hmm.
and in percentage is 1.25%.
Yes. Thank you very much. I was looking for that word compared to yesterday, and you used the term, and I'm very happy about that. Yes. Compared to yesterday, we always say what is the price change and what is the percentage change. And that is what I have done with you to convince you how is that we get the percentage change and the price change. Any quick question here for me before I proceed further?
Yes, I have a question. For example,
yes, Aldo, please go ahead.
Maybe let's say an asset, yesterday's price, close price is the same price as today's opening, or it can change suddenly, like it closed one way and then on the morning it opened with another price. Is that possible?
Yes, thanks for that question. By the way, if you see here, for 26th, the close price is 241.05, correct? And for today, that is June 27, if you see, the open price is 243.24. There is a difference. There's a difference. Now, when we speak that yesterday's closing price should be the tomorrow's opening price, That means we are saying theoretically. Now, in the accounting language, what happens is balance carry forwarded and balance brought down. And last year's balance, last year's closing balance becomes this year's opening balance. This we have seen in the accounts, correct? That holds true in the case of accounts. But since we are talking about market, markets are subjected to price changes, right? There is a disclaimer. Markets are subjected to price change, right? Now, what happens in the case of the markets? We generally see three scenarios. Maybe you can say yesterday's close and today's open. Let me take off this and then I'll write here today's open. Now, there are three things. One, you can see yesterday's close is equal to today's open price. Yesterday's close price is equal to today's open price. Scenario number one. And in the another case, like in the Tesla's case, we had 241.05 yesterday, and today it opened at 243.25. Maybe you can see today it is greater than yesterday's closing price. Or the third possibility is, again, it could be lesser than yesterday's closing price. Now, why is it I'm saying this? Because in the market, we see gap up, or we might see gap down. And the another thing is neutral in between. There is no such change. See, the markets are subjected to change. The prices here is not controlled by a single person like you and me. Here, the price is controlled by the market forces. Now, when I say the price is controlled by the market forces, what does that mean? It means that the demand and supply will decide the price of an asset here, price of the security here, price of the equity share here. And that is why we see probably gap up, gap down, or sometimes if the markets are not that great, both of the big news, maybe upward or downward, then you can see probably somewhere around the same. But you may not see exactly the previous close as today's open, because we are in the market, and market, the prices are derived by the market forces. I hope you got the answer. Yeah, thanks, Aldo. Yeah. So any other question before I proceed further? Aldo has given a confirmation saying that yes, he is done with that. Any other questions from anyone? No problem. At any point of time, if you think so, you can write in the chat box, or you can always unmute and then you can come back to me. Well, now let's get into this. I wrote case one as markets are likely to be positive. And when the markets are likely to be positive, we are expecting that Tesla price also will increase. We are expecting. So I'll be writing here some of the words to make you understand and feel comfortable. We are expecting now Tesla share prices to go up. Let us make a team here. We know the case 2 is driven by Daniel, and for now I can ask Aldo. Aldo is running a team here. Okay, I'll just write Aldo. With him, he is having 5 members. Okay, Aldo, can you just guess what is your expected increase in the Tesla's price? Maybe for the day end, or for tomorrow, or for day after tomorrow, or for the next week. What is that you are expecting the prices to go? Be optimistic now. Don't say you're pessimist. I want you to be optimist now. Meaning your analysis says that the prices will go up. Now, to what extent the prices are going up? What is your guess?
I am guessing the prices will go up about $5 or less.
$5. $5. Okay. Now, can we make it a kind, say here, expected price? I want you to go to the rounding off price, okay? Expected price. Let me help you by saying that let's go for the expected price. Yeah, now you can expect a price. Rounding off number, no decimals. And when I say rounding off, you can have the price differences of, let's say, the last digit can be 5 or 0, something like, say, 240, 245, 250, 255, something like that. What is your guess?
Number be correct, like $248.5?
No, you will have to have a rounding off guess here.
250.
250, yeah. So here you will have to identify one point, which I said that I'm asking you to expect a price and you expected at 250. You said 248.5. I accept your price, but when I'm expecting a price here, I want you to have, I mean, I'm giving a rule number 1 to have it as a rounding off. Rule number 1, rounding off, no decimals. And rule number 2, I'm asking you to consider of either 5 or 0 as the last digit. Therefore, immediately I received a price as 250. Aldo, can I go with the $250 as the expected price?
Yes, sure, of course.
Okay, thank you. Now, hold on. I'll just go to the case 2. Here, Daniel and the 5 members, they are expecting that markets are likely to go down, meaning Tesla share prices to go down. Prices to go down. And this is purely on the basis of the analysis. They are thinking that, okay, now the prices of Tesla will go down. Now, let me ask Daniel or Daniela in the team, what is that you're expecting now, the prices to go down? To what extent? Do we have Daniel and Daniela in the class? Yes, we have Daniel as well as Daniela. Daniela, you there? Oh my goodness. Not done with the break yet? Okay. Now, can I ask, say, Sarah to be in this team and then say, what is that you are expecting the prices to go down now? Sarah, you will have to be pessimist in nature. Your analysis says that Tesla share prices goes down. Your analysis is saying that the prices are likely to go down. To what extent you're expecting, Sarah?
240.
240. Okay, I'll take your price as the expected price. 240. Expected price as 240. We know that we are talking about in terms of the dollars. Yeah. So now we have got a tug of war. Aldo says, according to his analysis, the prices are likely to go up to 250. At the same time, we have Sarah and the team who's saying that their analysis says that the share prices are likely to go down to 240. Now, there is a fight between these two people. We really don't know whose analysis goes right. See, in the market, no individual can control the prices. No individual can control the market. Therefore, it is completely driven by the market forces. With Smile, we will have to say that it is completely driven by the market forces. Therefore, now, how is that we call it as? Now, the case 1, when you're expecting an increase in the price, then you are nothing but call. You are a bull. Do you agree? Because if you remember here, call is nothing but the bull, and bullish or increase or optimistic. So, accordance with that, here, Aldo is positive, optimistic. He and his team is expecting that share prices to go up. Therefore, what he can do, he and his team has an option that is to buy call option. He is having an option to buy a call option. And Aldo and team, they're expecting the price to be at $250. Okay. And they have an option now to buy a call option. Why call option? Because they have an option to buy because they are expecting the prices to go up. This is in the case 1. Let's go back to the case 2. Now, this is really interesting. You should be a bit smart here. And I know that you are very smart. Sarah and team, when you are pessimist, when you're pessimist, you are a bear here and not the bull, right? You are a bear. And when you are a bear, what you can do, you can buy put option. You can buy put option. You have an option of buying something. Yes, what is that you will buy? You will buy a put option. Why is that you are buying a put option? Put is pessimist. Put meaning expecting the prices to go down. Put meaning the negative. When there is a negative news, when the analysis says it is not a good time for Tesla share prices to go up, not a good time, which means that it is a time to now fall down. When you're expecting the share prices to go down, what is that you can do? You have an option. Yes. Sarah and team has got an option to buy put option. Now we will see in detail how it looks like buying a call option and buying a put option. What I'll do, I'll immediately share my entire screen and then I'll take you to the Tesla. Okay, yes. Now, if you remember, I clicked on the markets and then I clicked on most active. Let me do that activity once again. And then I'll scroll down. I can see the top stock for now, which is highest active is Tesla. And then I'll click on this Tesla. Okay, I'm getting into the Tesla. Oh my goodness, yes. The prices are fluctuating. Okay. Now what I'll do from here, I'll be clicking on this options. Maybe you can have a quick look here. In the menu, there is something called as options. I'll be clicking on this options. And then I'll scroll down. Okay, great. Now, you will have to have some patience here to read and understand. Yeah, you can see the first thing is in the drop-down button, there is something called as June 30, July 7, July 14, July 21, July 28. Now, can someone look into the calendar carefully and then tell me what are the days for these dates? Just check out the calendar, go to the July month, and then look at the date 7, 14, 21, and 28. Which day is that? Look at the calendar and then tell me. July 7th is what?
It's Friday.
Yes.
Friday.
Yes. Thank you. I can pull up here. You can see July 7, 14, 21, 28 happens to be the Friday, which means that these options are in the nature of expiry. They have got the limited time. Now, in the month of August, you have 4, 18, 4 and 18. Now, what I'll do, I'll just go to the calendar. I'll just go to the August. I'll check for 4 and 18. Yeah, it is still a Friday. Yes, it is a Friday. I just wanted to say that on Friday, yes, on Friday, on a particular day, these contracts are getting expired. So now what I'll do, I'll just take here options. One of the characteristic feature is that these options has a characteristic feature of expiry. On a specific date, these options will expire. So therefore, what does that mean now? The first thing what I did was I just checked here, June 30. June 30 happens to be Certainly Friday. This Friday, this contract is getting expired. Yes. So I have selected June 30. Let me remain in the June 30. Okay. I'll just scroll down. You can see here it says calls for June 30. Calls for June 30. Okay. I'll just scroll down. You can see here TSLA. TSLA stands for symbol, ticker symbol, ticker or symbol. TSLA, Tesla. And you can see 23, that 23 is the year 2023. And you can see 06, that is the June. And you can see the date of expiry, that is 30. So you can simply read this as Tesla 2023, a contract. Okay, I'm just reading the first contract here. Let me break this and then take it on the board. I think that is much required. I'll just take this. This is not that easy to remember. So what I'll do now, what is the price of Tesla for now? It's 244, right? Okay. And we know people who expected 250. I'll just scroll down. I'll scroll down till I get something here. Now, if you see, there is something called as a strike here, right? Strike meaning a price, expected price. So what I'll do, I'll just try to get into the expected price of a call, that is 250. I think I should be a bit slow here, not to make you feel difficult. Okay, yeah, I have reached here. Yes, I did reach 250. What I'll do now, I'll take a quick snap of this. 250, it is here. Okay. $250. Okay. Now, how do I read this? Now, TSLA, this is the ticker symbol. In United States, they call it as a ticker. Sometimes they even call it as a symbol. Across the globe, people use this word symbol. And now this 23 is the year 2023. 06, you can see here 06. This is the month, that is June. And you can see the 30 here, it is a date. And you can see C. C is nothing but call. It is call. If it is P, it means put. C meaning call. And you have 2 O's, and then finally you have 3 O's between the number, between the price, that is 250. This is the expected price. This is the expected price. So Aldo and his team, they have expected, on the basis of their analysis, that the prices of Tesla is likely to go up. To what extent? To 250. And now they have got an option to buy a contract that is at the price of 250 strike price. I'll go to the website again. Yes. Now you can see that they expected 250. Aldo and team expected 250, right? Yes. That is another feature here. All the contracts will have a strike price. And strike price is nothing but expected price. Like how Aldo and team expected 250 and Sarah and team expected 240. They're expecting it, right? That expected price or the projected price or the forecasted price can be called as strike price. Forecasted. In simple words, I can say that betting, it's a kind of like a betting, right? We are betting. Aldo and team is betting that the prices will reach to 250. Sarah and her team is betting that the prices will come down to 240. We know that I'm using the word betting because markets is all about the systematic gambling, right? It's really a funny statement, but it's true. We are not on the poker game where we call it as the gambling, but here in the stock market, we are more systematic. See, I'm here so systematic. I'm a systematic gambler, right? I would like to call myself as a systematic gambler. And you are a well-informed, educated person. Now you are a systematic gambler. You are betting 250, Aldo and team. And Sarah and team, you are betting that the prices will come down to 240. We are betting it. Systematic gamblers. Let's go back. So the first characteristic feature is that we saw that these contracts have got the expiry, right? And here the contracts are getting expired on Friday of the week. And the second important characteristic feature, what we have seen is that there should be a strike price for a contract, right? For a contract. And the third important aspect is that now, if I want to buy, if Aldo and team wants to buy 250 strike price contract, at what price it is available as of now is the question. Therefore, you can see here, can someone tell me if I want to buy a contract, a call contract, which is expected to be at 250, at what price it is trading as of now? By looking at the screen, you can guess and then tell me if I want to buy one contract of a Tesla for the month of June in the year 2023, expecting a price to be at 250. The 250 betting contract I can buy at what rate?
3.2.
Perfect. Therefore, what is this 3.2 is called as?
Is it like a prime?
Yes, it's an option price. It is also called as premium. Some textbooks, some authors call it as the premium. At the same time, you can simply use a word called as option price. So I'll be writing here option price. That is the third characteristic feature. Sometimes it is also called as premium, option premium, the rate at which it is available to buy. Now, let's go back to the screen here. Now, yes, here you can see it is available at 3.2, 3.2. Now, if you see here, the percentage change is almost 5%, almost 5%. Now, if I just go back and then if I see the equity price, let's scroll up. Yeah, it's 245. It's 245. And the percentage change is 1.8. And close to 5% is the up for the call option contract, which is expected at the rate of 250, right? So I'll just scroll down and then I'll take it on the other window. Otherwise, I'll have to keep on doing this activity of scrolling down. I'll take this in a new tab. Okay, yeah, I have it here. Now, a very simple question to everyone. If someone wants to buy a Tesla company share, can that someone buy a single share by paying 240 plus US dollars? Can someone buy a single share? Yes or no?
I think they can, but it depends on the type of contract.
Yes. If it is just an equity share, I'll just use this space here. Please make a note of this. This is really important. If I just want to buy equity share, that is one quantity, it is possible. I can buy a single share of Tesla by paying $243. It's possible. But in the derivatives market, I'll have to buy one lot. I have to buy one lot minimum. So here, the lot size, one lot size is equal to how much quantity is the question. I have something here on the web page. I've already taken it up for you guys. I'll just go for a website called as roboforex.com. And then from here, if I see Tesla Incorporation, if I just scroll down, you can see here size of one lot is equal to 100 contracts. Size of one lot is equal to 100 contracts. Therefore, this is the another important feature which we need to make a note, that the fourth important term is lot size. Like how you purchased one share by giving it $243, in the same way, you cannot buy only one by paying a $2.43. If you pay just $2.43 and if you say, can I buy a call option, then you just think for a while. It is just a 10%. The price of a call option is just a 10% of an equity price, right? Therefore, you will have to buy in a lot size. Now, the fourth important characteristic feature is lot size. Therefore, one lot size is equal to 100 quantity here for the Tesla. Maybe for the other company, you may see the other number. But for Tesla, if I want to buy one lot, then I'll have to make sure that the quantity is 100. So what I'll do now, I'll just go for the case one. Here, Aldo and team, now if they want to buy a call option here, they have to buy one lot. One lot is equal to 100 contracts. They have to buy in bulk. Yes. Now, can you tell me the price of call option now? If let me capture the price as a 2.33, my goodness, it was close to 5% just few minutes back. Did you notice that? And now it's 3.71% down. Why is that so? Let me check the underlying price. Okay. Yes, if this prices falls down, the equity prices, if this equity prices goes down, then definitely the call option price also will go down. Yes, that is the logic which I'm trying to build here. Okay, let's come back. So now just try to understand that the call option of 250 is available at 2.33. I'll capture this 2.33. Current market price is equal to $2.33. Therefore, can you tell me what is the total investment, Mr. Aldo and team? How much money is required in order to buy one lot of Tesla call option? Total investment required is how much?
233.
Yeah. How is that I can get that? Total investment is equal to?
We multiply the lot size by the price of the option.
Yes. Yes. Times lot size. Thank you very much. Now the option price is 2.33 and this is multiplied times 100. And what is the answer you get here?
233.
Yeah. Now, by paying $233, you have purchased one lot of call option. Now, Aldo, everything is recorded here. This session is also recorded. This board extract is also shared with you. And you will be keeping a track on Tesla price. And then you will be giving a report in the next session what has happened to your investment. Let us understand by now, Aldo and team has invested $233 and they purchased one lot call option with a strike price of 250. This is case one. Hold on for a minute. If someone is feeling difficulty in terms of going in a flow, don't mind. I'm not really fast. Maybe soon after this session, I'll be sharing this recording. You can put a pause and then just try to understand what I'm talking about. Okay. Now, I'll proceed with the case two. Sarah and team decided that on the basis of their analysis that the markets are likely to go down and the Tesla share prices are likely to go down. Now, when they are expecting that the share prices of Tesla is likely to go down, what is that they do? They go to the market and they look for the put option. Let me scroll down here. Let me show you. Be careful on whatever I'm doing here because you have got a project and you have to do that. Okay, I'll just scroll down and you can see here it is for the calls for June 30. Okay, no problem. I'll just keep on scrolling down. And then I have got so many strike prices for the call option, right? The moment when you see here, see, it is a call option. Okay, let's scroll down, scroll down. There are so many contracts for Tesla for this month. That is June 30, right? Okay, I'll just scroll down because my target is now to get the put option. I'm doing this activity live in the class to make you feel comfortable, not so difficult. Yes, I could spot that. What is that I am spotting? I am spotting here puts. Put option, right? Puts for June 30. Okay. Sarah said she and her team is expecting 240 strike price. So I'll just scroll down and then I'll locate 240. Okay, I'm just scrolling down. Yes, we are here now. We did the assumption. Rule number 1, rule number 2, and then yeah, 240 here. I'll just pick up this. And then I'll go for the new window. Okay. Yes. My goodness. Can you see the percentage change? If you're the real investor in the market, probably your heart would pump high now because it's 45.13%, which means that close to 50%, the value has been reduced. Right? Okay, let's come to the point now. We are setting a model in the session number 2. Okay, now, Sarah, at what price you can buy one lot of a put option?
It's the 3.15.
Yes. So I'll make an assumptions and I'll write here the option price is at $3.2 and your total investment would be, this is equal to option price times lot size. Some textbooks, they write it as a quantity, no problem, no big deal. We know that one lot is equal to 100 contracts. This is not the same for all, but this is for Tesla. Be careful, okay? And now the option price is $3.2 and then times 100. Sarah, what is the total answer now? 3.2 times 100, how much?
320.
Yeah, $320. So Sarah and team has invested now in the market on Tesla's put option. What I'll do, I'll quickly capture the put option, the nomenclature. This is really interesting because you will be having my board extract. You should be able to remember it. Okay. Let me get that. Give me a moment. Yes. And the next slide. And then let me paste it here. Okay. We are good to go. Yes. Got it. So what is that we did for now? Yeah, what is that we did? We have set a case. I'll just make a quick summary here. We did look into the derivatives market and more specifically into the options market. And then Aldo versus Sarah. Okay. Aldo happens to be bull and Sarah happens to be bear. Why is that I'm using bull and bear? Because Aldo is expecting that rise in the price, rise in the price, rise in price. Now here Sarah is expecting fall in price, fall in price, right? Okay, and they both entered into Tesla Incorporation. And we know that Tesla Incorporation was trading at the rate of 243.85 when we started the session. So I'll be writing here that spot price happens to be 243.85, 243.85. This is the dollars. When it was trading at 243.85, Aldo did analysis. Sarah did analysis. And on the basis of their analysis, they decided that they can be bull, they can be bear. And Aldo is expecting $250, the spot prices, right? And here Sarah is expecting the $240. And both of them have bought. Both of them have bought. Yes, both of them have bought. Now you can see here, Aldo bought call option. And Sarah bought put option. And we know that the expecting 250 happens to be the strike price for Aldo. We also know that Sarah came up with the 240 as a expected price. So I call that as a strike price. And both of them bought at the rate. Now let's go for Aldo. Aldo bought at 2.33 option price, 2.33. Bought at $2.33, right? Okay, here Sarah bought at $3.2, $3.2. Okay, and the total investment happens to be for Aldo, it is $233. Total investment happens to be $233. And here for Sarah, the total investment happens to be, it's simple, $320. $320. Now, in between, there is something called as an equity, right? So what I'll do now, let me go to the list here, Brian. Okay, now I'll say Brian. I'll change the color of my marker. Give me a moment. Where is that? It's not allowing me at the moment. Yes, please. So let me take, yeah. Mr. Brian has invested, say, on 10 shares. Therefore, what is the total investment of Mr. Brian? Total investment. Mr. Brian, what is the total investment now?
2043.
Yeah, that we get to know 243.85 times 10 because you're purchasing 10 shares. Now I'll say dollar, how much? 2438.5.
Yep.
Yeah. So now, if you can see this, 3 cases. The middle one happens to be the equity market. Equity market. And the left-hand side and the right-hand side happens to be the options market. Options market. And here also it is an options market. And we know that the options market is coming from the derivatives market. In the same way, we have something here also derivatives market. Now, milk is this equity. Milk is the equity. And we know that the derivatives market is nothing but the yogurt. I'll be writing here, yogurt. Yes. I conclude here by saying that if the milk price increases, the yogurt price increases. If the milk price decreases, the yogurt price decreases. With that understanding, there is a logic here, which we will be unlocking in the next session. If Tesla share price increases from 243.85 to 245, Mr. Brian is making a profit. 245 minus 243.85 is the profit per share for Mr. Brian. And now, if this prices goes to 245, the call option of 2.33 may increase for sure. Definitely, it will be increasing from 2.33 to something else. And that we have to see in the next session. Now, what happens to Sarah and team? That is really interesting here. That is the crux of the derivatives market. If the share price goes down from 243.85 to 242, 241, 240.75, then the price, the option price at 3.2, whatever she bought, that keeps on going. In simple words, if your expectation happens to be true, then your price increases. Maybe Aldo, if he is expecting, Mr. Aldo is expecting the prices to go up, and if the prices are going up, you can see he is making profits with smile. The similar statement here for Sarah. If Sarah is expecting the share prices to go down and the share prices are going down and she is having a smile because she expected to go down the prices and the prices are going down, which means that the put option prices goes up. For now, maybe it is too much for you, but I would like to put a pause here and stop by this point of time. I want everybody who are present in the class to monitor the Tesla share prices for today and use the group effectively, WhatsApp group, and keep posting, keep sharing the screenshot of the Tesla before the market closes, and try to read what happens to the call option and what happens to the put option. It's a complete practical understanding for today. You will have to keep on monitoring this. And tomorrow, when we come back to the class, we will be having the picture and we can make a post-mortem of the study of these three cases and we can analyze who has made money. And this is called as the risk management because we are trying to manage the risk. That you will get to know when you crack the understanding of the call option and a put option in simple words. Before we end the session, any quick question? We have 2 minutes time. I've kept it open for you. If you have any question, you can ask me. Now, who's making money? The entire screen is shared. You can see something and tell me who's making money now.
Me?
Yes, because I'll show this summary slide. Yeah, Mr. Aldo has invested at 2.33 and now it's 2.6. Great. He's making money. Let's check the put option. Certainly, the put option now. Sarah invested at 3.2 and it is at 3.15. She's incurring loss. Yes, the journey goes on. Oh my goodness, now see over there. Sarah bought at $3.2 and now it is available at 2.98. And if I can pull my calculator here quickly, yeah, I know Sarah purchased at 3.2 minus it is at 2.98. 0.22. Yes, 0.22. 0.22 is the loss on a contract, right? 0.22, and this is again multiplied by 100, and then if you see here, $22 loss. Maybe Brian is making money. Let me check in the equity market. As of now, the price is 244.97. 243.85 is the price at which Mr. Brian has invested. He is making money. He is happy because it is close to 245 now. He is happy. So now this is the learning. We have to take it forward from here. In the interest of the time, we have to stop. I'm sure you should be having thousands of questions, millions of questions by this time. Let it be a silly question. Don't mind. Text me directly on my WhatsApp, because your quick questions, your small questions should be answered quickly to you. So I'll try to make sure in next 1 hour or 2 hours, if I receive the queries, I'll be answering it. Yes? Is it really interesting, the derivatives? The option
Yes.
market?
Yes.
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 Yes.